You're listening to the REITE Club podcast, where the focus is all about helping you grow your real estate investment portfolio and live the life you want to live. Come grow with us and join our community at thereiteclub.com. And now your hosts, Sarah Larby and Alfonso Salemi.
Just a couple of key things that you want to stay on top of on the U.S. side of what makes a good deal look like. So one of the things I'm looking at is like, what's median income look like, for that area. I want that to be above $40,000 to say like, hey, it's at least at this level of threshold of economic stability, for that area. I'm looking for job stability as well. So like lots of governmental things. I really like investing in around governments or universities, and really just watching like my macroeconomic trends around like what's my supply and demand curves look like. So if I have a lot of people moving into a city over time, I'm not so price sensitive because I know the demand will actually push prices up over time and say, great, well, I know that that's how those macroeconomic things are going to work. So like, for just to reel us back for a second, this is exactly what happened in Austin, right? So like 4 or 5 years ago in Austin, everybody was like, there's no way I'd buy a property in Austin right now and pay $200 a square foot, because prior it was $150 a square foot, right? And they're like, there's no way, this is insane pricing, right? But the demand to move to Austin by major corporations and the tech industry was so strong that now pricing in Austin just, a few years later is over $400 a square foot, right? So it's really important, I think, to look at the data trends that are going to be your macro indicators, more so than like historics of like, what do we think the proper pricing should be?
Yeah, that's a great point. I mean, those are important fundamentals, right? And, potentially where if there's universities nearby as well, if they're increasing their student population, and just, and I don't know if you've got like a list of like all the different things that you check and you verify per city, because even in the States, I think almost even more so than Canada, you could be in one town that's 10 minutes or 15 minutes. And I mean, this is what I hear. You can tell me if I'm wrong, but it's completely different versus, here, there's still some differences, but I don't ever think it's like as drastic as like you go to the other side of the train tracks and it's like a D area versus like maybe a B area on the other side, and just like really understanding those streets even more so. Like it is still important to do it here, but I think you guys just have a different level of those contrasts in a lot of places in the US.
Yeah, and that's why, like with a lot of our like Canadian investors that come in, what they really, really like is going into like turnkey providers, right? That says, hey, this looks like a property or like a section of properties that are in an area. I would just say, like, just in general, turnkey providers are really, really good if you can't ever fly out to a place, right? Because anytime I'm getting into a new area, typically I'll actually fly out and go visit it, walk the neighborhood. I usually think like going for like long bike rides or walks are actually really good because you actually get a different feel than driving through it. Just because you spend maybe a little bit more time. I don't really know why that works, but Robert Kiyosaki does like the same thing when he was really hot into real estate. But turnkey providers are really, really great, right? Because what they've done is they said, my business model is built upon the cornerstone of being able to tell people that I have a asset, right, that's going to perform in this kind of way. So then it takes all of the guesswork off of it. So of like, how do you think that's going to perform? Because it's because of the nature of the arrangement that you're going into. So if anybody is investing in Canada, I say, well, great, either partner with somebody here that's local and amazing, right? That'd be like option one. And option two would be, I would think, go to like a turnkey provider. But investing, especially here in the States, in an area that you've never seen, that you don't know anything about, and you're doing it all on your own, you can do it. I've seen some people do it, but it's also the highest risk way to invest.
Yeah, I mean, there's definitely pros and cons, and there's also turnkey companies that do a lot better than the others. So like doing your due diligence and your research on these turnkey companies are going to be really important. I mean, there is a downside, right? They take a lot of the profit off the top, so you're probably looking at more cash flow, mortgage pay down over time, maybe not so much of the appreciation that's been forced if you're not the one doing the renos from the start. But there are turnkey companies that have really bad reputations out there. So like just, figure out which ones have the good ones and which ones are, the ones that you want to partner with, because it could go bad pretty quick.
Yeah, that's right. Yeah. And so that's why I think I really like the leverage that we bring, but a lot of other companies are like ours, right? Well, we'll aggregate into people. We have relationships that are over years, and I think another step up in quality than what you would get from like a referral from like a buddy that's used a turnkey company. Because if you can find companies that are like mine, and there's a number of them out there, right? They should have relationships with people that are like, hey, over the course of years, like I know these people are quality, right, with like what they do, and that's what you really want to target, is like that level of professional relationship to be able to actually have real reliability.
Yeah. And the other thing I just want to underscore is that like you can't just wash your hands, guys. You have to, you got to do your own research and work and in keeping different people accountable for different things. When we say turnkey, there's certain levels that, like Scott said, and I want to go back to it because, those macro indicators, that's the research or control that us as investors have to go and look at certain areas, compare and contrast, and have ideas. And then really when you are talking to the turnkey or, that investor is really asking them the right questions and satisfying your own predictions. Because if it sounds too good to be true sometimes, well, hey, it just might, right? So let's go back to those macro indicators. You said them really quickly, but so that the audience can have a good listen to them, that when you're looking into a new market.
Yeah, so I mean, you got to think about like what makes sense, like what makes sense for like what would determine like a price for real estate, right? So one is going to be like what's your stability in the market, right, for people like needing that type of residence, right? So when you think about that, you're going to think about like, do people have jobs here, right? That's why I like governments, big those kind of things, because those can usually be like a little bit more stable. And universities, right, they're more stable in saying those people have jobs, right? The economy goes ups and downs, but those kinds of people have jobs, and we're looking for them to. It's like, well, what more do I know about those people? Well, I know that they're inside of like a certain income range, typically, right? So I'm going to say, great. Well, I can find out what my income, some research of the needs that we're buying properties in. So I know, and then I can also look at like what's the government, like all of the local governments and agencies will typically have economic data that they push out about like how many people are moving into the town, what the taxes are that are collected, et cetera, right, that comes through. So it's government agencies that you're actually going to be able to pull a lot of the data that's going to be like the really high economic data on that end, right? A lot of people tend to think about like how much crime is in the area, right? On the U.S. side of things, I'm not sure how it works in Canada, but almost invariably in the U.S., crime follows job stability and economic depression, right? So as long as wages are high enough, right, and that we have and good job stability, crime won't be a factor for you. So I don't even pay attention to criminal reports really, because I don't think that they're actually like the best source of information that we really have over like a long term, right? And that's like another reason why I like to go to an area, because if you can kind of feel it if this place feels sketchy, even if there's pain, like it's like something's not right here, it's good to just go ahead and spend some time there.
Yeah, absolutely. I mean, that's why like sometimes we hear of like $20,000 houses. There's probably a reason why they're $20,000 houses for the most part, right? And you definitely don't want to be buying something where you're going to put a tenant in there and never get paid, or have super high vacancies, or have drug dealers in the house. Definitely do your due diligence. It's always good to have, like you said, feet on the street. So, walk us through, like, if I wanted to buy in the US and I wanted you to come up with like a plan and a strategy, like what are some of the things that you would go through with me?
Yeah. So typically, let's say that you're like, first time person, you say, hey, Scott, I'm looking to get into the real estate in Canada. I want to invest in the United States. I don't really like know like what to do. Started. How can you help me do that? So the first thing we do is we say, great, enroll into like our family office membership, and we're going to go through and we're going to map out like what's your one sheet, which is like your path to financial freedom, where we break down all your KPIs from your one sheet of what are the numbers that you need to hit to be able to accomplish your financial freedom. From there, then we work backwards to say, great, how much money do you have and what's the ROI that you actually need on that money to be able to hit what those targets look like. That will then inform us on what's the appropriate asset class that you should be focusing on, right? Because different asset classes have different advantages and disadvantages depending upon what are your underlying fundamentals of your financials. So I say, great, well, actually it looks like single family homes are what is going to be best for you, right? After we go through and we do that analysis. So from that point, then we would start looking and say, well, how are we going to acquire the single family homes? Are you going to try to find them yourself? Are you going to be working with like partners through people that you found like on biggerpockets.com? We have a ton of clients that come from website, as a number of other websites. Do you need like introductions to people inside of our community that are also buying properties? And maybe you want to partner with somebody that's an existing RLS client, because we have, about 2,000 investors inside of our community to do that. Or are you looking to get like a turnkey investor? You want to do something on your own, but you want to work with a professional that can actually just pair you with the asset that they already have ready and has like a historical precedence of how well that asset performs. And that has a lot to do with what do you see your vision moving forward look like?
Thanks for listening to the REITE Club podcast and joining our community of real estate investors online at thereiteclub.com, where the focus is about helping you grow. We look forward to seeing you again next week. Thanks from your hosts, Sarah Larby and Alfonso Salemi.